Thanks so much for joining us today, Barney. So the question I have to start off with is you've got revenue increasing, but you've got profits falling off a cliff, some might say. So how do you explain that when you've got, basically new business coming to the fore?
Look, we made it quite clear that what happened is obviously our turnover went up, our GP went up quite nicely to nearly 600 million. But as we've noted, we've obviously written off approximately 36 million in debt and stock, which is effectively as a result of a policy change. So as far as the sustainable revenue is concerned, that effectively has grown. But obviously if we deduct the write-offs, and it was actually coming for some time, and we're quite happy that that had to happen. We had to clean up the business this year, and that was part of the mandate from the board in appointing me.
As you say, restructuring, a change in strategy. So what are these new products that you mentioned that you're going to be launching soon? And what are the old kind of disposals or old products that you're turning your back on?
We're actually not turning our back on anything at this. What we're doing is we've, in fact, put a whole new engineered product line in the field. It's dealing with our existing business, being mainly the fleet business, obviously. But one of the key developments this year, and one of our biggest highlights, was obviously moving into insurance telematics in South Africa with our partner Discovery Insure, an incredible partner. We've done quite well this year in launching it, and obviously we're looking at some fast growth from that area. And we've also now launched in the UK with Coverbox, and there's a few other deals happening over there, and we are piloting 3 new projects in Australia, in fact, on insurance telematics. So we've put a lot of money and resources behind that part of the business. For the rest, it was really just getting our products again ahead of the market, particularly in fleet. We're the technology group. We've got to stay ahead of that, and we are quite comfortable with the investment we've made this year.
Yeah.
Is that we are quite ahead as far as that part of the business is concerned.
Let's delve into this insurance telematics side of things, because I was speaking to one of your competitors, Altec Netstar, earlier, and they were saying this is a very exciting part of their business going forward. What type of earnings have come through from the Discovery Insure partnership? How many new subscribers or how many new boxes are you looking to install and during this partnership?
What we've done is it's obviously been our launch here, and we've installed just over 20,000 as a launch effort. Obviously, we anticipate that growing quite rapidly going forward. And as you can imagine, with this type of business, the idea was not to make money in the first year. So we anticipate the profitability to start dropping in the current year moving forward. We see that as quite a good profit contributor going forward. From a cash flow perspective, obviously we've put a lot of money behind that, and we would certainly start seeing that coming back. So in the current year, with the figures you see, we have not really accounted for any profitability from that part of the market. That's the exciting bit in going forward, and yes, we are equally excited about that in the South African, Europe, and obviously in the Australian market. Just to make a note that obviously the UK market is about 10 times the size of the South African market. So we are quite excited about having launched in that market. And we've only started rolling out the products obviously after year end, although the deals was obviously signed in the previous financial year before June.
So do you have insurance partners over in the UK right now?
Yes, we have signed already. Coverbox we have announced. There are 2 others which we will announce shortly. And in Australia we have also piloted, obviously with some major partners, but we're not ready to announce that yet. Once we launch, obviously with the partners, they are quite sensitive about it. You've got to understand this is core part of the new insurance discipline moving forward. If you want to be in vehicle insurance, our belief is you need to be able to understand driver behavior to properly determine your insurance risk. Yeah. This is where we come in. We provide that back office system and that part of the technology that makes it possible for insurance companies to manage their insurance risks better. So we become an essential part of those people going forward.
As you say, you're a technology company and telematics has many broad uses. Are you looking outside of insurance? Because I know other competitors are looking to the motor manufacturers, for example, for growth.
No, of course. I mean, the OEMs, as they are called, the motor manufacturers, even machine manufacturers, are part and parcel where you do online installation, obviously, of telematics. Our power, however, doesn't only lie in the boxes. That's only one part of it. Our real strength lies in our ability to have back office systems that can deal with either multiple manufacturers, or obviously from regulatory perspective that can deal with huge numbers of subscribers outside that can deal with it. So the box part is only one element, and that's why the OEMs come in. The key element of our business is, and moving forward, anybody in this space has to be agnostic. You've got to be able to deal with various manufacturers, various boxes, and you cannot be only fixed to your own box as well. You've got to start using applications on smartphones. You've got to start using the cloud from a hub perspective, and obviously from a manufacturing perspective. Traditionally, we have manufactured all our products ourselves. Obviously, we've got to start looking at even outsourcing some of the high volume products out there. That's the game. It's obviously, it's new, it's fresh, it's fast growing. There's massive opportunities, and we're obviously cutting out our edges in that market. Quite excited about our future going forward.
Give us a guidance then for 2013, because diluted HEPS, as I said, down 48% to 22.23 cents per share during this period. How much growth are you going to see, or are we going to see in 2013?
We will see growth. I'm not going to try and now put figures on the table. Obviously, as I've indicated, the result of our once-off write-off, in fact, policy changes in the debtors and the stock is the reason for the headline earnings falling. If it wasn't for that case, obviously we would have seen some growth in the current year. So our sustainable business is growing going forward. We anticipate that growth to continue. We anticipate our top line. You know, if you look at our GP has in fact increased by 22%, our gross profit, to nearly 600 million. So that's a nice figure in cash coming out of the business. Our key job now in the year going forward is to see that more of that gross profit in fact falls down to the bottom line. And yes, I anticipate obviously some nice growth as far as the bottom line is concerned. And obviously the write-offs has been a once-off situation where we've written off more than 36 million that hit the bottom line. But we felt we needed to clean up our debt and stock policy in the current year. That was part of my mandate as coming in as CEO. We've done that. We've restructured the management team at top level. We've introduced new products into the field. I am satisfied. We are ready on a solid basis to grow forward.
Well, Barney, best of luck. Thank you very much for unpacking the numbers for us. Digicore CEO Barney Esterhuyzen.